What's up, everybody? Welcome to the stream. Happy Friday. Hope you all had a good week. My week was pretty good. What you're seeing right now on the screen is my homework, which I said I would do last week, and now I'm, of course, doing it beyond the last minute, but that's because I don't have a particular due date. So expect this out this weekend. I'm going through and updating a video I did 1 year ago today about a Bitcoin strategy using Ichimoku on the daily time frame. This is important because if you follow the last stream, you looked at my post, or you've just been watching the market, what we see is a daily bullish breakout on Bitcoin. And we've been waiting to see something like this. The last time it did was in March, and it actually was a false breakout. But if you still follow the strategy, you would not have diamond handed it beyond 37,000, and you would have been out through this entire bearish run. It never gave the signal again until last Friday. Last Friday on the stream. That's why I put in the thumbnail, the big bull sitting on top of this flat Ichimoku cloud right here. This is a very, very powerful signal. Let me try to pull that up real quick to give a little teaser. Hey, what's up? Glad you guys joining on TradingView. Good to see some familiar faces. I'll go ahead and plug right here. I have a Discord, which I'm also streaming this on. I do keep a Discord. I don't charge people for it. I'm just building a trading community. I share all my trades there in real time. Sometimes I don't put it on TradingView, but check the links below. Come join. I'm not going to charge you for it like some. I'm not making money off of education, that sort of thing. I just love trading, love talking about it. And, you know, I can't find every single opportunity out there. I can't follow every single altcoin. There's 500 stocks in the S&P 500 alone. I can only look at so many. So if you guys have some ideas, come share them with me. And same goes in this stream. If you got some symbols you want to look at, call them out. By the way, if you're seeing this right now, you can you probably don't have this problem, but in TradingView, I made the note: if you ever get a black screen in TradingView and trying to view this live stream, do a refresh on the page. That tries to that'll usually fix it. Hey, what's up, everybody? Thanks for saying hi. Let me know you guys are in the chat. Again, if you have any questions, or if I start talking too fast or want me to explain something, more than happy to slow down and explain why I do the things that I do. So this was a video that I did last year, and let's bring it up here in the other browser. I kind of briefly mentioned it last year, but what are the best Ichimoku numbers for Bitcoin? Let me post it in the chat right here. Go back and watch this video before I do the update. I pretty much lay out, you know, what the debate is between the old Ichimoku numbers and the new cryptocurrency Ichimoku numbers. And people came around and they thought that they're going to come up with better Ichimoku numbers, 30, 60, 120, because, well, crypto's open 24 hours a day, 30 days a week. You know, we don't need these old numbers. Look, it doesn't actually matter what numbers you use as long as you're consistent. But in this, I did a deep dive into all the times that this signal fired, all the way back to 2012, 2 years at the time, and showed that the actual legacy numbers actually outperformed the buy and hold or the new Ichimoku levels, or new Ichimoku numbers. And so what I want to do here is go through and rechart the whole data set. I can probably pull up my Excel spreadsheet, but I'm going to do it again. And the premise is very simple. When price, which is the candlestick, gets above the Ichimoku cloud at the same time that momentum does. In other words, when this purple line right here, which is called in TradingView the lagging span, well, here it's displacement, lagging span 2 periods. Okay, I don't like the way TradingView does that. What you should have is the Tinkinson, which is the 9 period, the Kijinson, which is the 26 period, the Senkou B, which is the 52 period. Those are the base numbers, 9, 26, 52. And then what ends up happening is you have the closing price shifted back 26 bars. That makes up the Chikou. Of course, I'm not Japanese, so I'm pronouncing these improperly. So it's either momentum, lagging span, or Chikou, whatever. That gives you your extra confirmation when price gets out of the cloud. You want to wait for that momentum to get out of the cloud at the same time. That gives you your confirmation that a actual trend, either bullish or bearish, can start. Now, the opposite happens when price gets below the cloud at the same time that the momentum gets below it. And so what you can go back in history and look, I'm going to do the work for you, but you can see where if you just wait for those signals to set up on Ichimoku, just on the daily time frame. I mean, you can use this on a 1 minute if one were so inclined, but we're looking at this on the longer time frame, the investment type time frame, so that we can make smarter investments with Bitcoin. I've had a very good debate with a young friend of mine that I've known for many, many years. I've known him since he was 16 years old. He's 24 years old now, and he knows everything about Bitcoin. He's very inclined to teach me. And I like to listen, maybe learn a little bit, but I try to share with him that you can do better. And what he tells me is like, I'm not a trader. I don't want to trade. Like, I just want to buy as much Bitcoin as I can when it replaces the dollar. Okay, well, I don't know about that last part, but we can help you get more Bitcoin at cheaper prices rather than just DCAing in blindly. So when you have the inverse signal, when price crosses below the cloud at the same time momentum does, that's an opposite signal, and you want to get out. And so you can pull big trends. And this isn't just Bitcoin. You can use this in any instrument, any stock, whatever. And it can be a very powerful long-term tool, because what you want to do is you want to have some kind of a warning when the trend is over. And that's what you're going to be able to get by just looking at this simple signal. This is looking right here specifically. This is the March 2019 cycle, and you would have been able to avoid a very small down move right here. In other words, at this point where you got out in August of 2019, you would have avoided this whole down move, and you would have been able to re-enter Bitcoin here. How much lower is that? That is, you would have been able to get a Bitcoin about 11% difference. That's a small difference, but more recently, where people should have been out of this Bitcoin downtrend was in April of 2022. In April 2022, according to this, you should have not been in Bitcoin, and then you could have re-entered last week as it finally crossed above the clouds. Notice how it stayed well below the cloud through this entire bear cycle, kind of poked its head a little bit right before the FTX collapse, but before momentum got out, right there, before that gave you that confirmation, boom, it went down. And you didn't re-enter until Friday the 13th, last week. And what you saved by doing that was a 50% drawdown, of Bitcoin. You can, by getting out when the signal fires, get Bitcoin, get twice as much Bitcoin if you want to own it. Now, some people don't want to do it. They don't want to get capital gains. I understand, but this is just an idea for people to use. And I've done the research. I'm going to do it again just to help people understand why this is such a powerful signal and how it can be used to better your trading and investing. So again, thank you guys for coming and posting into the chat. I already got some questions. If you all have questions, if you got things for me to look at, I'm more than willing to entertain them. You may not like my opinion if I tell you that your crazy parabolic hockey stick is probably not going to change the world, but I'll just give you that to it. So what I like to do to start off every live stream is a little bit of an intro, which I just did, and then we're going to do some market analysis. We're going to look at cryptocurrency first. We're going to look at the stock market, look at a couple of individual things that I traded this week, and usually that takes up a lot of time, and if you get me guys talking about something, I will. That can be actually one of the most things I enjoy is answering your questions. So again, plug links below, like, share, and subscribe, and Discord, which is free. Just come and hang out in the community. All right, let's take a look. All right, someone told me, let's see, let's go back up a little bit. All right, Aver Keys Killa, what's up, man? All right, so you think that it's going to go down within a week because of the thin green cloud. Well, I have studied cloud flips in Ichimoku. I have studied a lot of things with Ichimoku. And sometimes you can use different components of Ichimoku to come up with some indicators. I mean, there's a lot of lines interacting here, a lot of different ways that you can use it, but nothing is more consistent than the breakout. And if you start trying to layer on these different, indicators, if you try to lay on different interpretations, I worry that you might miss the forest for the trees. The key thing going on right now, it began last week. The key thing in Bitcoin right now, which began last week, was when price closed it was Thursday of last week. Okay, Thursday, January 12th, 2023. Price closed above the cloud at the same time that the momentum got out. That was your signal. First time it's happened since March of this year, which this ended up being a false breakout, but that's fine. You got the symbol to get out here. Nothing's going to be 100%, but it's far better to take a loss of 9% than to take an additional loss of, all the way down to here, 60%. So I'd rather take a 9% haircut than a 60%. I'd rather buy it 90%, I'd rather buy it 90% of what I could otherwise instead of only being able to buy half. And so from that point on, it's been very interesting this whole week because what did it do? It got up to this pre-FTX high. For those that have been living under a rock, this big dip right here was from FTX going bankrupt, sending shockwaves through the market, crashing every single cryptocurrency, and that was the big news. But emotions have abated. It didn't go any further. And so what you return to is a bit of confidence. Yes, I made a little smiley face there. See, that's the smiley face of bullishness right there. See, like a little bull. There's horns. Okay. So that is what has been happening over the last few weeks, and it's been banging up against that pre-FTX high for 1, 2, 3, 4, and then finally today with everything going up, the NASDAQ, the ES, S&P 500, now you finally get that punch through resistance, and it's going. And so there's a little bit of hesitation there, but the rules had not changed. The trend was still bullish. And so now we need to go into where can this go? So if we're going to look for resistances where this thing can go, we need to look at the higher time frame. And so this is Ichimoku on the weekly time frame, which we can use, and we see that even though the daily time frame has turned up into a bullish trend, the weekly time frame is still bearish, and it's been bearish since May of last year, May of 2022. Now, let's just go back and look at something right here. All right, so here is the weekly time frame back around the COVID crash. Here's March of 2020. That's COVID. You see this big run up right here? That run up was what a lot of people thought after the 2018 high was the next bull run. It was not. There was still a major economic event, a major market shock, a little bitty tiny recession in there, technically, statistically, to bring Bitcoin all the way back down to 4,000, somewhere it had been just a little bit, a few months before, 2 years before. So everyone that was buying in right here, FOMOing, because they saw it was that cheap, and they're like, "Oh no, I didn't get it at 3 or 4,000. I'll never get this opportunity again." Well, you did. Just like people thought that they would never get a chance to buy below 19K because that was the prior all-time high. I was told consistently, Bitcoin has never broken below its former all-time high. Okay, well, there you go. That wasn't a very good rule, now was it? It's a cool story, bro, but wasn't a good rule to go on. But again, here's the weekly, and at the point that Bitcoin cleared the Ichimoku strategy on the weekly in 2020, July of 2020, that is when it looks kind of messy, but all the rules fit. Price was out, momentum was out. Now you're bullish. And just look at this chart, because people look at the logarithmic charts, people look at the current charts. That's not nearly as useful as going back and looking at this. Look at how crazy this chart is. Look at how volatile it is. It means nothing. I mean, we can throw in an RSI and we can see it going up. We can see moving averages. They're kind of going back and forth. But this helps filter it all out if you just focus at where price is, where momentum is versus the cloud. See, that's a kind of an unhappy emoji right there. It looks like nothing, but that was the moment where on the weekly, the long time frame, you would have been able to say with confidence that a bullish trend had started. And that was what launched us as well. And so a lot of people FOMO. And what I've told people for years and years and years and years is you don't need to. If there's a bull trend in Bitcoin, you will see it. The problem, the reason people are blinded to it is because they look at that initial chart where it looks like garbage. There's this emotional FOMO rally that fails, and everyone's like, this Bitcoin thing, it's no good, it's no good. And so that's why we should use our indicators. That's why we shouldn't look at too much. Indicators don't really tell the future. They basically give you enough confidence to take a trade. And the more indicators and the more signals that you implement, the more doubt that you can actually instill in yourself. You want to try to keep things as simple as possible. Like, what is the trend doing? And that is why I try to use just Ichimoku for the long term. Now, on my day trading, I do things a little bit differently, but that's day trading. But for the long term, nothing has been a better indicator. And so as we look at this weekly chart, where Bitcoin actually gets into the territory of going to whatever 100K that people think it will, it's going to have to traverse a lot of time and space to get officially bullish, to get rid of this bearish sentiment. So in the long term, Bitcoin is still in a bear trend. And just like it did in 2019, I think a lot of people, if this bull trend starts going up further and further, are going to start FOMOing in. They're going to not want to miss this opportunity for them to become fabulously wealthy. And I do actually think that we have another leg to go. I don't know when it's going to be, but this is not the first time it's done this. 2019 was not the first time either. If you go back and if you go on BTC USD and look at the Bitcoin all-time history index, give me my cursor. Okay. You can find that even back in 2013, in that run, which took it all the way up to 1200, you had a fall off, a bear market that lasted for 2 years. You had a little bit of a FOMO rally. Wait, where am I looking at in here? I was doing it in 2014. Oh, I'm on the weekly still. Sorry. We're using the daily because no one can be patient enough for the weekly. Let's be honest. And we go back to 2014 to 13. Okay, here's 2013. Bull run up to 1200. Runs up, price gets bearish here, and you go into that, which I just noted on the weekly, a very long bear market. You had another one of these kind of FOMO rallies, which got up to about almost 700 after being in a low of 300. It doubled from a low, and then rather than going up and retesting that all-time high, it came back down to make lower lows, even getting as low as 178. So after the 2013 run up, you had this initial bear cycle, came down and made a low, lower than anyone thought it could go, had a rally, a bear market rally that got people to FOMO in, and then failed to go even lower. The same thing happened in 2019. In 2019, same thing. Price makes an all-time high, 19,000, comes down. Everyone assumes that's it. Nope, it's not. It gets cut in half from 6,000 down to 3,000. 2019, FOMO rally. No one thinks that we'll ever see sub 10K again. And what do you know? In COVID, it brought it down to kiss 4,000. So all the stories that people have told, like, Bitcoin's never going to get back to 19K again. Well, what do we get? We got close to 15,000. Bitcoin is so volatile. I can say with confidence that at any price in a bull run, you will come back and see it. People were trying desperately to make me listen to Michael Saylor and buy Bitcoin when it was up at 50,000, 60,000. When he was making the podcast circuit, I told him, look, I don't need to buy Bitcoin at 50K. Even if it goes from 50K now up to 300K, I know some point in the future it's going to retrace 75 to 85%. So in other words, if Bitcoin had gone up to 300K, and now in hindsight that's obvious, but just think about it at the time, laser eyes and all that stuff. It was going to go to 300K. Well, even if it did, it's probably going to come back. No, it's not. It's going to replace the dollar. No. It's still going to go 300K, and it's still going to pull back 75%. And where would 75% have put it from 300K? Right around 60K. So there was no reason to jump into it. So that being said, where do I think Bitcoin's going to go? Well, I think you got to look at this downtrend and measure it out from the all-time high down to this low. And so the most optimistic target I would have for this run is, it happens to be the top of the cloud right here, 42,000. Let's just call it 42,000. And then the beauty of that is once it gets up here, you can potentially take some profit, and then you can wait to see, well, does momentum go out? And then if it does, then you can buy it again. I know that some people might not want to do that, take on the capital gains, all that sort of thing. But that's going to be a lot safer of an option than just trying to hold on to it and let it come back from that if it becomes resistance. Before it gets to 42,000, in other words, that's the most optimistic target, you need to look at it from this recent leg down. And so the next resistance from basically this leg down right before it hit the Celsius crash, that's going to be, the next resistance is going to be around, let's call it 24,000. And so from the FTX high, which was our first resistance, up to 24,000 is going to be the next, where you want to see what happens. You want to see if it does something like this. Bounce, 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 bust through. This is a solid bust. It's going to the next level. I can say that with confidence. So be wary of those levels as we continue to traverse. Again, if you have questions, you want to tell me that I'm dumb, go ahead, fire away. Tell me that Bitcoin Standard is going to be the replacement for money. I'm ready for it. All right. Let me read some of the questions in the chat now that I've ranted for a little bit. What do I think about the Boom Pro? I don't know what Boom Pro is. It's nuts, huh? That means it works? Yep. The market will now follow the SPX downwards. There's not much left. Open 3D. Try Ichimoku Boom Hunter Pro. What is Boom Hunter Pro? Is that an indicator in here? Boom Hunter Pro. Okay. Oh, wow. That's a lot of lines. Okay. All right. What do I do with this? I'm very hesitant to add more indicators. I've been doing this trading thing for about a decade now. And I'm not saying that I'm not victim to my cup being too full. You know how the master wants the student to come with an empty cup so that it can be filled properly. But I have come to appreciate simplicity. And I'll give it a look. I see how it shows you should go long, you should go short. I would be curious to do a back test on this. Like for instance, it tells me that I need to go long here, maybe long again here, long here, long here, long, and this is in December when you had this U.S. jobs report that tanked it, brought it into actual bearish territory. I mean, maybe if you combine the two, it can help filter it out. But there's a chance, like it went long here in May when you should not have been going long. And it wanted you to go short here. Okay, cool. Yeah, it caught you there. You're good to go short. There's a lot of different dots. You know what? Maybe you can teach this to me, but it's not going to be better than anything else. Sorry. I've been doing this too long. You show me something new, I'll check it out. I'll look at it. I'll vet it. But yeah, I don't. I'm pretty comfortable doing what I do now. So that being said, we'll put that away. I'll check it out. I'll look at it because somebody recommended it. I like to learn new things. Let's move into the other cryptocurrencies. All right. So Ethereum, it also has been doing the bullish breakout. It actually hasn't quite got to that pre-FTX high, that 1678. So that's gonna be interesting that it hasn't quite reached it yet. As a sort of a trading the two majors, Bitcoin and Ethereum, off each other, it'd be interesting to see what happens when Ethereum touches that 1678 level, and see if Bitcoin also starts to sort of falter at that point. You need multiple signs of long to have good confirmation. Just research a bit and see, bro. I don't think I do, actually. I think one of the things you have to do when you get into trading is you have to accept the fact that you're going to take losses. You're going to take a lot of losses. And one of the ways that adding indicators and adding confirmation, it's an effort to get that win rate really high, because losing sucks. Losing hurts. We psychologically process loss far more than wins. In other words, you can have 3 winning trades in a day, and I'm definitely subject to this. If I start my day with a losing trade, I immediately go full tilt. So I have some very specific rules that I use. I don't use multiple indicators, but I have very specific rules based around essentially one kind of indicator and then risk reward. And I'm just very, very specific and disciplined to that. Because if I take a loss, I'm going to get very upset. I have to meditate. I can get over it. I can take another trade. But when you start adding indicators to a chart, what you're trying to do is you're trying to get 100%. You're trying to engineer a solution to the market. And that just doesn't work, because you're ultimately modeling chaos. You're modeling the emotions, the irrationalities of everyone else. So if you add these indicators together, and if that gives you a system that lets you be disciplined, then go for it. If it works for you, that's great. And that's why I'm not going to discount it and say that it's not useful. It probably is useful to some people. But be careful. Be careful adding on indicators, especially if you, like, I don't understand the code of this indicator. Well, maybe actually, since it's public, can I look up the code? Oh, we can. Okay. Well, that's cool. All right. Well, that's pretty cool. It take a while to kind of go through here and piece out what he's doing, but um, I mean, the fact that he made whoever the author of this made this and just released it for free. This is a lot of work that went into it. So props to him for this. Definite props to him. Definite props to him. So maybe I should just make an indicator for the Ichimoku signal, make it a little bit easier for people. So yeah. All right. But anyway, Ethereum. Watch for it to get up to this level right here. Monero, which I've been watching for a while, that interestingly, before Bitcoin even cleared the pre-FTX high, Monero had already busted above the high. Now it had a pullback here to confirm that FTX high as a support and launches right off of it. So that's Monero gives a very good example. And by the way, Monero has been outperforming Bitcoin for the better part of over a year. It's pulled back significantly, but since January of 2022, Monero is still up almost 100% versus Bitcoin. It's been a better store of value in the bull market. In fact, the thing that has kind of developed now is as Bitcoin has become bullish again, the Monero's performance has suffered. So we're starting to kind of see what this could mean. If we get into another bear cycle, in other words, if we get up to one of those resistances in Bitcoin, then the store of value may actually shift back again to Monero. So I'm going to be watching that. But for right now, there's a big, big pullback on the Monero versus Bitcoin exchange rate. So, but Monero is still relatively more valuable than it was before FTX and after the FTX bottom. It's still up more than Bitcoin is from its pre-FTX and post-FTX. So I find that interesting. So BTC.D. Well, you know, that's a good question. It kind of segues from what I was talking about with the market cap dominance. Here, I'll tell you what. I'm gonna Boom Pro. I'm gonna make a note of this, and I'll add that back at some point. Boom Pro. We'll test that out. So let's take a look. What do you think about BTC.D? Is it going to break down 40% or is it going to go higher as Bitcoin goes higher? Well, I think you have your answer. It is going higher. And this is, of course, the market cap dominance of Bitcoin. And just to what I was saying about when we looked at that Monero versus Bitcoin exchange rate, you know, the other major, or the major really one is the Ethereum to Bitcoin, stayed pretty static. The Ethereum to Bitcoin exchange rate has stayed very, very static. They've been very, very correlated. And that's what this indicates right here. So there's not been a clear winner between Bitcoin and Ethereum. But if we're looking at the Bitcoin market dominance, BTC.D, I am hesitant to use the Bitcoin dominance chart as an indicator signal. That's because it's a derivative of not really price action, but definitely market sentiment. So you definitely can. And if I was going to do that, I would say that, you know, Bitcoin has come up to a resistance right here. Of course, we see it on Ichimoku because it's that flat line right there. But that's, of course, the 50% retracement from the high from June. We're on a weekly here, down to the low in September. And so it's come up to this as a potential resistance, but I hesitate to call it that because this isn't price. This is Bitcoin's relative market cap to the entire cryptocurrency market cap. And of course, in this recent run up, just as Bitcoin has been outperforming Monero, it has been increasing. People are putting more money into Bitcoin than they are to the altcoins. I think that, you know, we're still in that bear market, and Bitcoin is still seen, or at least in years past, seen as the safe haven cryptocurrency. And that's why it was very surprising to me to notice that Bitcoin was not necessarily the safest that people were considering. Monero was outperforming during the bear market. Let's take a look real quick at Ethereum dominance. as well. I imagine it's been going up as well. What other dominances do we have? Let's just choose Ripple. And so Ripple's been going down. So let's look at one more dominance. Cardano. Let's look at that. Yep, Cardano's been a little volatile, but still the trend is sort of down. So yeah, that's Bitcoin and Ethereum both are benefiting from this bear market rally, and that's what it is. It's a bear market rally, and so it has been interesting to watch that. But as far as like using the dominance chart to predict anything, I don't really know what that tells us. I really don't. I don't trade it. I don't use it in my decisions. I just look at the price action of Bitcoin. So let's see, Averskilla. What did you bring up for me here? So this is the market cap dominance. Yeah, so it's if this was a price chart, I would say it's coming up to resistance, but I don't know what that tells me about Bitcoin. I don't know what that tells me if I should buy or sell Bitcoin. It's dominance. I would need to do a deep dive and have some real conviction about what this means for Bitcoin. All right. So how is it that the dominance of Ethereum is increasing? Is it living a new life of its own without BTC? Probably. I mean, look, I am not a Bitcoin maximalist. I think that Bitcoin is fundamentally old software. And while they have Lightning Network and they have various other side chains that are being layered on top of Bitcoin, because if you talk to some of the more ardent Bitcoin maximalists, they'll tell you, Bitcoin can have NFTs, Bitcoin can have smart contracts, and I think to myself, why? Why does it have to be Bitcoin? Oh, because Bitcoin is the only solid money. It's the only real cryptocurrency. I'm like, it's like saying that Pets.com was the only online retailer for pets. Okay, and you can go buy dog food from Amazon now. Look, something else that can do it better is going to take market share from it. And so if you got all these ideas for Bitcoin, you better put them out now and you better make them good. But saying that it's possible and then trying to engineer solutions on this tech that is politically charged to the point where it's not going to evolve on the layer one, I think it's not really going to work. Okay, and I'm not a normie for saying that. I think it's someone that has worked in tech and has lived through the .com and seen the way that human beings treat software and technology. We're really scared to do new things. We're scared to try new platforms, even though they may be completely better, because we don't want to lose all that we've invested into the old platform. We just don't. But Ethereum is the market leader for alternative use cases for cryptocurrency. It just is. And so, yes, I do think that Ethereum and Bitcoin are going to probably decouple. And I actually think that at some point, Ethereum versus Bitcoin is going to decouple in a positive direction towards Bitcoin. Do I want to say it? You know what? Yeah, I think that at some point, the Ethereum Bitcoin exchange rate, instead of being 0.07, in other words, 7% of Bitcoin, I think that over time it's going to move to 1. Now, that could involve Bitcoin going down. That could involve Ethereum going up. But the exchange rate of Ethereum versus Bitcoin, I do believe is going to converge. I do believe it's going to go higher. I think that Ethereum, especially as more use cases are developed, unless you have, chains like Solana or chains like Cardano or something like that, do it so much better than Ethereum to take away its first mover advantage, then maybe they'll take some market share. But it really just comes down to the thing: what happens when a use case that is not readily apparent to us is used for. I mean, that's what cryptocurrency is. You need to look at cryptocurrency as software, and software has to be able to evolve. Software has to be able to iterate. It has to advance. And if you're stuck on old software, you're stuck on old software, and it's going to lose on some of these new cases. That's just what the history of, computer technology development has shown us, and that is what cryptocurrency is. It's different, but it's not. It's different, but it's not. All right. Do you think BTC can get to 100K by 2025? I think it can. I think that if you're going to buy Bitcoin with that in mind, if you're going to say, I want to get to 100K, you need to be willing to acknowledge that an 85% drawdown from the all-time high, which has happened before, at least twice, is possible, and that would take it down to 10K. So what you need to understand is that if you buy Bitcoin now, your risk of the capital that you put in is 50%. So you're willing to take on a 50% drawdown or more, potentially more, to achieve that goal. Now, that's a 5-to-1 bet. That's pretty good. That's pretty good. But you need to go into it with that mindset. You don't need to ask, can it get to this target? Can I become this rich? No, you need to say like, okay, what am I going to allocate? And how much am I going to give it? Am I going to hold this thing forever? Okay, well, then you shouldn't worry too much about it. But you should also have been paying attention to Bitcoin when it was giving you a better signal a few weeks ago, because now what you've done is you've given up about 20%, which in the grand scheme of things up to 100 doesn't really matter. But as I said going into the beginning of this live stream, this is still a bear market rally. You have a lot of resistances for Bitcoin to clear. So I don't think it's going to be a straight shot from here to 100K. I think you got a lot more headache. People were just not going to YOLO into it like they did just a year or two ago. The pain of this down move is too fresh on people's minds. There's just too much doubt. Now, inexplicably, doubt is what you have right here. Like on this rise up, people are still doubting it. But to get that push, to get people to buy it beyond that all-time high, you have to have complete reckless abandon. You have to have 0% interest rates. You have to have people flush with cash. And here's a chart from this week that someone showed to me. It's one of these sort of doomer type charts. Let me pull it up right here. Jen, if you can help me out, the savings rate versus the credit rate. Where was that posted? Was that in Amateurs chat? So let me scroll up here and try to find that. And I was having this discussion last night. We had a Bitcoin birthday celebration. By the way, Bitcoin is now 14 years old. So in 2 more years, it can drive. It's 2009 to 2023. Did I do my math right? Yes, I did. Math is hard. Oh, let's see. See if you can find that for me, Jen. And the one thing I think people have brought up, and I don't think people have really considered, is they'll say one thing, but not really consider the implications of it. A lot of people, a lot of doomers, say we're going into a recession. Maybe so. Maybe so. Maybe the indicators are there. Maybe that's in the future. We haven't really had a big one since 2008, like a big 2-3 year recession. The job market is very, very strong. People are still working. People are still employed. In fact, you can't find workers in a lot of cases. Let's see. Did you find that? There we go. Thank you. You're awesome. So this is the savings rate, the personal savings rate. This is the cash. I imagine the cash that people have in savings. And of course, in 2020, pandemic hits. Everyone squirrels money away because they don't know what's going to happen. Everyone's going to die of this, bad flu that's going around. And plus, Fed was, printing all that money, so it found its way in. But now that savings rate has dropped down to like a 15-year low. Like not since 2005 has it been this low. In fact, it's probably going on to be one of the lowest rates in the history of this chart right here. So the cash that people have sitting around to put into risk assets, to put into equities, is vanishingly less than it was 2 years ago. People just don't have that much money to burn like they did. And another thing, interest rates are up. What does that mean? That means that you can get, sometimes in some cases, 3.8% in a savings account. It's not good, but it's not zero. And there's no risk. Back when Bitcoin did this whole big rise along with the stock market from 2020 to 2020 through 2021, the interest rate, the risk-free rate was nothing. You had to take risk to get any kind of return on your money. Now that's different. Now you can go and you can buy some, there's some stocks now offering you a 5% dividend yield, whereas before they were, below 2. There's other options out there to get much less risky return on your money. So the market environment for the big bull crazy run is different. It's just not there. So this bull run that we're seeing right now is going to be substantial. It's going to give people some extra life. But I like it that you asked the question 2025, because I think a lot of people have that sort of sentiment, like, it's probably not this year, maybe not next year. We'll see. But the other thing to consider about a potential recession, a real recession where people lose their jobs, which is not what we have right now, is what happens when they really start running out of savings. What happens to these people that have some cryptocurrency and they need to pay their kids' school? They need to buy groceries, and they're looking at this, stuff. Well, they're not going to go out and buy cryptocurrency because they know it's risky. So you're not going to have buying pressure, and they may end up having to sell it just to pay their bills. Bitcoin has never been through that cycle before. We don't know what's going to happen there. And so if you have in your head, we're going to go into recession, and you're also, very aware and owning of cryptocurrency, you need to pay attention to that. And to that end, I would encourage you, if you don't want to have to sell cryptocurrency in this cycle, whatever we're in, if you want to keep holding it for the years to come, you need to learn some trading and you need to learn some hedging. And that can come in the form of getting onto a margin account somewhere. I know it's a little dangerous. Don't go crazy. Just try to find a way that you can. There's a lot of options platforms now. Deribit is one that I've used in the past. I don't know if they're open to U.S. citizens. But start looking at ways that, okay, let me find ways to offset my risk a little bit. Or just make sure you keep your job and you don't have to sell it. So, but just be safe. Be safe. What do you think is going on with DXY, prospects for the next half year? Well, I'll talk about DXY right now, but one of its component points is the dollar yen. And for the last couple of weeks, I've been talking about this one Forex trade that's been going on all the way from November. And it's the dollar yen. The dollar yen was on this big, giant, beefy bull run all the way from January 2021 that topped out in October, right around that CPI print where the stock market turned. It did a nice little 50% pullback, which, if you notice, that lines up with the Ichimoku Tenkan-sen. That's why I just use that Tenkan-sen right there to identify when a strong trend ends and sets up a 50%. And so that set up a pullback all the way to the 50% of this whole run up. So, if you looked at this chart here, it's a big, big bullish run, big bull run, big hockey stick. This is the yen, a whole country's currency, versus the US dollar, up about 45%. Wow, almost 50%. And in the time since October, it has pulled all the way back to that beautiful, beautiful 50% retracement level, which it hit last week, or maybe it was early this week. Either way, hit target. DXY looks a little something similar. one of the best performing asset classes of 2022, despite what everyone said in 2021 that cash was trash, was the US dollar. And DXY has done the exact same thing. It has pulled back because the dollar yen makes it up, the euro yen looks it up. Euro USD is the major component of the DXY, the dollar index. I think it's something like 60-70% of the dollar index. And it still has not quite reached its 50% of the trend, but very close, 1.09, let's call it, after, towards the end of 2022, getting below parity, below 1. So right now, the DXY is at support. It is at the 50% retracement, and you need to watch it going into the next few weeks. I mean, this is Forex, this is currency, so these things play out slowly. But you need to be watching around this level to see what happens. This is a key level. You might overshoot it like it did there. It may, but if this thing starts to actually turn up, then pay attention. You may be getting some resurgence. But what it does here is going to be very, very key. Now, going on closing bars, which is the best thing we can to know if it holds or breaks it. Let's see. So my indicator right here is measuring it from that low. Let's just go ahead and do that. We'll give the benefit of the doubt this from the low of lows in January of 2021. So January 2021 up all the way to September of 2022, and then here we are in January 2023. 2 years later, it has pulled back to 50%. Just looking at this as a bar, the 50% is 101.99. The closing price is 101.99.6 or 99.6, 99.9. It's holding for right now. It's holding this support right now. Now, what it's going to do for the next half year, because it's a bullish trend, because it's holding, I have to assume that it's going to go up and try to retest that high. That can change, but that is what I would look for the dollar to do. Now, that has some kind of interesting implications for the dollar's relationship with the stock market. So another indicator I've been watching this week is the VIX. Now, the VIX, and I haven't really gone into this. We've been talking about cryptocurrency whole time, but I need to get this in before the live stream ends. So the VIX at multiple points from March of 2022, August 2022, December, and then finally very recently, it has gotten into this 1920 zone, which if you go and look at the stock market at all these instances in the past, this has been a major turning point. In other words, this has been a high that rolls over on the stock market. March was the bottom March was the recovery from the February invasion of Ukraine. And then you had this, volatility came away, and then the market topped out. And then, of course, in August, market topped out again. And then December, we had a top out again. And now it's come back in that zone. Busted below it a little bit, but it's still back above it, still a little undecided. And so I found that very interesting as the NASDAQ has been holding a resistance, or at least it did, here at the 50%. But this is a big, nasty consolidation. And man, today's price action really busted above that resistance level. The S&P 500, it has come down. It basically, I got a lot of lines here, but I'll just highlight this. So from the low that it made in December up to the high that it made the last 2 weeks, it pulled back to the 50%, and that is where it held there. This is going to go and try to retest next week, and we need to see if it's going to bust a little bit higher. But that's a good solid hold this week of a support zone, which also matches up with the highs here. So that's a really good hold of this zone. So VIX is sort of showing us a questioning signal. The dollar is at a support, and the market has hit a support as well. I'm going to assume that the dollar is going to go up and the stock market is going to go up, at least going into the next few weeks. That could change, and that's sort of contradictory, but that's just what the charts are showing me. So if you got any final questions, go ahead and post them in the chat. Let's see. I think I had a chat in the Discord, which, by the way, I have a Discord. It's free. It's because I just like to build a community. So make sure you guys come check that out. What was on the chat here? Okay, thanks. You posted the Fred chart there. All right, thank you. All right, so a couple of things this week because people ask me what am I trading. I post these in the Discord today. Was PSA, public service announcement. No, this is actually public storage, and I get this signal every day. Is that going to reveal my account number? No. Okay, so I basically look for spike signals using Thinkorswim, and I try to find the ones that are the most likely to succeed. And spikes are basically where you see a sudden price movement in one direction followed by a reversal in the other. And yesterday, PSA, which is a storage company, it fired that signal for me, and it didn't quite get to that level. But what I liked about it was from the March COVID low all the way up to the all-time high. Is that an all-time high? Yeah, all-time high. You have this big trend over the last several years. This is the weekly that we're looking at on PSA that is pulled back to the 50% of that level. More, and that's on the weekly, 50%. More importantly, you also have this little short trend from the beginning of the year, from January the 5th up to January the 12th, which that's what I like to see. I like to see at least some kind of a little movement, and it pulled back to its 50% level at 28.56, and then earlier, yesterday, it spiked down at that level, and then on the second retest, I caught it here. I'm looking to take it up to here as an initial take profit, but given that this is a weekly trend, I want to see it retest that high. And if I want to add a cool story, bro, to it, this could have a secular outperformance if you think about what it is. It's storage. It's people having to store their stuff. Let's say that there's a displacement in the housing market. What's actually going to benefit is people needing to put all their furniture and things away. That's my cool story, bro. But ultimately, the technicals have me getting in at a good level, a good small 30-minute time frame with the promise of trying to take this for the rest of the year. So this was a pickup from this week. We'll see how it plays out. If the rising tide of the stock market goes up, then I think that all ships are going to be lifted. But this is the one that I really like this week. Another one that I picked up this week was SYK, and that was based on this little short trend right here. But this I only think is going to come up to maybe retest the high at 264. The one from a couple of weeks ago, HSIC, is still holding above this key resistance, turned into support, which it hit right at the beginning of the year on January 3rd, where I picked it up, and it's slowly holding above this level. I'm not going to let it get back below, but this is something that I'm looking to try to come up and retest the high as well. So those are the stocks I'm looking at. And of course, TLT, this is going to be a long play, but it, from the beginning of the year, continues to slowly channel up. It's bonds. It's going to be boring. It's going to be slow. It's for boomers. They take a while to get out of bed in the morning. And of course, to circle back, Bitcoin, just let it go. Let it go up to about, what did we say? Let's see if we can get it up to, from this leg down in March down to here. Let's see if we can get up to 3,200 before we get concerned. So that's what I got for you guys. Why does the SPA... Okay, hold on. What is the most simple indicator for beginning proper trader? I recommend Ichimoku and keeping it simple. The most simple indicator that you can use, which I just talked about, Atra, like I said with PSA, if you go into TradingView and you go to the drawing tools, fib retracement, if you just look for 50% retracement levels, and what you're going to do is you're going to draw that 50% retracement or the Fibonacci retracement and take off everything but just the 0, the 1, and the 0.5, and then look at how often price tends to hold a 50% retracement from a trend. As I just showed you here, I'll redraw these next week. On the S&P 500, let's see if it's just on the SPY. Make it a little bit more simple. Yeah, so on the SPY from the low, or let's use SPX. It should look pretty much the same. Yeah, there we go. So if we look at the SPY from the low, this is on a 2-hour, the low that it made in October, that was on the October CPI, where the market really started to turn. If we draw ourselves a 50% retracement from the bottom there until where it tops out in December, which happened to be the other CPI, where are we going to do? Okay, there we are. And we just kind of sit here and wait, boom, for it to hit that 50%. That, to me, is the most powerful indicator in trading. It's if I was going to add something to it, I might add an RSI, but I don't. I think it's just powerful enough as it is. But that is such a powerful tool for finding support and resistance. So just try to look at that. And then, of course, Ichimoku, if you know what you're looking for, what Ichimoku does is it draws every single line, the yellow line, which is the Senkou B, the green line, which is the Kijun-sen, the red line, which is the Tenkan-sen. These are all 50% retracement levels. Like this 50% is from this high to here. And then this green line right here is from this high to this low. So these all end up being 50% retracement level. And that's why when this cloud goes flat right here, that's because it is the 50% from here to here. And that sets up the Ichimoku cloud right there. So that's where I developed my love of 50% levels, is from Ichimoku. But if you want to keep things simple and just draw the 50% for yourself, that can be very powerful. So glad to help. That's why I'm here for. I just like to share my passion for trading. So thank you all for spending your Friday with me. I do this every Friday at 4, and I hope you join me next week. So have a good weekend. Trade wisely.